Sudhir Singh, CEO Executive Director of Coforge, is now joining in. Sudhir, we were listening into the call and you spoke about how the demand tailwind in the current tech landscape is structural, strong. FY27 is going to be an exceptional growth year for the company despite the significant AI-driven flux. So what is it we should expect? Organic revenue growth of 15% for this year with an improvement in margins?
I think what you should expect is very robust growth from Coforge in what is a demand environment that is under stress and in flux. What I emphasized was that Q1 has been an exceptional quarter, and that exceptional quarter sets us up for an exceptional growth year. In all likelihood, making us for the third year running the firm that sets the growth benchmark for the industry, and at the same time also emerges as one of the, if not the highest margin mid-cap in FY27 itself. So it's been an exceptional quarter, and our confidence, our conviction that quarter one is going to lead to an exceptional year is at this point really high.
Sudhir, hi, good morning. What did you say on the investor call? It's 8% higher. What is
All I said, Prashant, was that there are clear structural tailwinds around legacy modernization, around creating AI-ready data foundations, around creating cloud infra for scalable compute, model hosting, and MLOps, and that the world isn't just a mesh where AI-led efficiency issues are deflationary with no tailwinds in play. There are clear tailwinds. Firms that pivot with intent, firms that pivot with speed will continue to reflect the kind of performance that we have even in the current quarter. If you take out the impact of the portfolio that we had actively announced last quarter, we are culling. We've grown 5.2% CC sequentially, and we've said that in quarter two, 1 month of which is gone, we expect that robust growth to continue. And of course, hopefully not just continue, but accelerate quarter three, quarter four onwards.
So for the full year, constant currency growth should be, you should be 10% plus?
The YOY growth for the firm on a reported basis is more than 33%, including in Cora. The CC sequential growth in quarter one was reported terms 1.2%, but excluding the impact of the India business, government business that we culled, it's 5.2% CC sequential.
And Sudhir, Q2 growth will be similar to this 5.2% growth we've seen in Q1. And are all the planned exits on account of the India business ramp down behind the company?
All planned exits are behind us. We announced it in advance so that there were no surprises. And Q2 is going to be a robust growth quarter for us, as are Q3 and Q4 likely to be.
Okay, so Q2, Q3, Q4 robust, which sets you up for an exceptional year. What about margins? In Q1, your consolidated margins came in at 16%, and this is slightly ahead of the 15.5% you spoke about in the prior quarter. Do you think you can hold 16% margins for the full year on a consolidated basis?
We definitely can, and that's the intent. When we started the year last quarter, we said that we would significantly increase our EBIT. On a standalone basis, we said that we would deliver between around 16.5% and consolidated basis of 15.5% EBIT. In quarter one, against that guidance of 15.5% for the year, we've already hit 16% reported EBIT on a consolidated basis and 16.7% on what was the standalone Coforge basis. So at this point in time, I think margins we think against the guidance are already in the bag.
So you are raising your consolidated margin guidance from 15.5% to 16% for this year?
We're not raising it at this stage, but what we did say in the investor call is that we do expect at least 15.5%, which was our guidance, but we suspect that that number can inch up, possibly go up as the year progresses.
Right. Got that. So just last time we spoke, right? We spoke a bit about outcome-based pricing, and you said, well, more and more, you are moving towards that. You're already moving towards that. Has the journey continued? And is it possible to quantify how much of the business operates on that model now?
Absolutely, Prashant. 6 to 7% of our revenue on an ongoing run basis is now outcome-based. It's got multiple flavors, as you can imagine. Some of it is linked purely to business outcomes. Some of it is revenue that's coming in using the Coforge mod squads, which are the hybrid human agent pods that we use on a subscription or a license basis.
So, if this is this from a pricing perspective? I mean, it's a size of business and that kind of thing, right? I mean, I'm assuming does it add or take away? You know, where will you be, say, by the end of this year, by the end of FY28? The 6 to 7%, what you said, outcome-based pricing, where will you be by FY28, say?
Difficult to put a hard peg in the ground on that one, but that number is likely to keep inching up. I don't think it's going to change overnight or jump a few cycles overnight. It will go up, but as you can see, over the last 1 year, that number's moved almost from 0% to 6%, and our margins have climbed appreciably. So it's not a number that's coming in at the expense of margins.
Any part of your portfolio, Sudhir, facing AI deflation? And if yes, how much?
There are certain portfolios that are facing deflation. There are others that are getting structural tailwinds because of some of the things I talked about: legacy mod, data foundation creation, scalable compute, cloud infrastructure creation. Net, it's a tailwind. There are elements, understandably, AI-led, efficiency-related deflation that we bake in. But the net number between the headwinds and the tailwinds for us at Coforge is clearly, as you can make out from our results, a tailwind.
Got that. Encora is now fully integrated and you've assumed complete control from day one. What are the expected revenue and cost synergies that you hope to realize in FY27 and FY28? If you could break that up.
Sure. As is our model, we don't take a long time, too long to do the integration or to actually come out with the hard synergy numbers. We shared in the investor call earlier today, 40% G&A cost out has been done. The folks who we wanted, we did not see as part of the merged entity, are no longer with us. 40% G&A costs have already been taken out on the Encora side. I want you to know that last quarter, the Coforge standalone G&A was 6.6%. The Encora standalone was 10%. The merged entity is now operating at around 6.5, 6.6%. So that is done, dusted, and behind us.
Okay, got that. You know, I just want to quickly, Coforge, I'm assuming, works with all the big models, right? I mean, Anthropic and OpenAI, etc. Sudhir?
We do.
So it's model agnostic in that sense. So my question is, this entire thing about cost of tokens, how does that play out for IT services companies? I mean, like you, who are helping, business transformation, integrating workflows, etc., with increasing use of AI. There were surveys done in the US which said that many are using Chinese models, right? Because the cost of tokens with the American models is very, very high. So that's a big story globally. How does that translate into, IT services companies and the revenues that you will make off these projects?
North America and Europe-based customers that we're working with, Prashant, are at least the ones that we are working with are not using Chinese models. North America and Europe-based enterprise customers are increasingly looking at open source intelligence. So they're looking at the Nemotron from NVIDIA. They're looking at the Llama from Meta. They are not looking, however, at the lower cost Chinese models at the current point in time. The shift that we are seeing is firms increasingly looking at open source intelligence, increasingly trying to move some of the data processing onto these models, or where they're using other frontier models, trying to make sure that the data processing is happening within their environment.
So are there any implications of that? Because they will save on costs, I'm assuming, right? As they do this and have more control, etc., as they move to open source models. But for you as a service provider to these enterprises, what does it mean?
We're agnostic, and these enterprises also will not necessarily save cost. Trying to put a model inside, assigning weights to it, does establish significant costs around governance, around security. So that piece is still playing out, and this space, as you and I both know, is evolving almost on a weekly basis. From our vantage, we do like to, as far as possible, make sure that we either put boundaries around the token costs that are assigned to us, and we put in step function changes in the contracts that we sign to make sure that it's not unbounded from our context.
What's the average size of the cost of tokens in these contracts, which is just out of curiosity? May not have a bearing, but what's the number, Sudhir?
No hard numbers to it. No hard numbers to it, Prashant. It's very contextual. So, for instance, if it's one of the 130 agents that we have out there, we have a good sense in terms of what the likely token consumption is going to be. In other cases, we do encourage our clients where we're not sure of the tokenomics to directly contract with the model provider. We incidentally at Coforge do have an offering that we call tokenomics, where we go to enterprises and help them assess and put boundaries around token cost.
One quick question, Sudhir. You've said Q2 large deal signings could be the highest in your history. What are we expecting?
Well, we're expecting deals higher than we've ever signed, and the highest that we've ever signed in a quarter so far has been, I believe, 6. We'd like to cross that number in Q2.
Okay, and overall in TCV, could you already come close to that $1 billion mark, since you already have a $230 million that you won recently?
We'd like to. We've already, in the current quarter, called out a deal at about $250 million in Q2, the quarter that we're in now, and that we've already consummated. But difficult to put a number on it at this stage. That's one deal at $250 million, but obviously an outlier in terms of size. We'd like to come as close to $1 billion as possible, but I suspect time will tell.
All right, Sudhir, always a pleasure having you on the channel. Thanks a lot for joining. And I'll tell you what, with today's move, Coforge, as the stock price has turned positive year to date, which has been a big outperformance if you compare the stock price of Coforge with the IT index as well. That's still struggling year to date. All the best, and we'll hold you to some of these numbers. We catch up at the end of the coming quarter as well.
Sure.